and pride, ensuring we transact with confidence. It's our passion to help our people and businesses succeed, making sure every Anguillan has the opportunity to flourish in a beautiful country we call our home. Welcome to the People's Bank. Welcome to the National Commercial Bank of Anguilla. Anguilla is our home. We've been here since the beginning. We are the only indigenous bank on the island. We are the pulse of our communities. We are the bank with a difference. Our commitment to building Anguilla means we value our relationships, friendships, homes, and businesses. Everything we do is done with care and expertise. We serve our people with integrity and pride, ensuring we transact with confidence. It's our passion to help our people and businesses succeed, making sure every Anguillan has the opportunity to flourish in a beautiful country we call our home. Welcome to the People's Bank. Welcome to the National Commercial Bank of Anguilla. Anguilla is our home. We've been here since the beginning. We are the only indigenous bank on the island. We are the pulse of our communities. We are the bank with a difference. Our commitment to building Anguilla means we value our relationships, friendships, homes, and businesses. Everything we do is done with care and expertise. We serve our people with integrity and pride, ensuring we transact with confidence. It's our passion to help our people and businesses succeed, making sure every Anguillan has the opportunity to flourish in a beautiful country we call our home. Welcome to the People's Bank. Welcome to the National Commercial Bank of Anguilla. Anguilla is our home. We've been here since the beginning. We are the only indigenous bank on the island. We are the pulse of our communities. We are the bank with a difference. Our commitment to building Anguilla means we value our relationships, friendships, homes, and businesses. Everything we do is done with care and expertise. We serve our people with integrity and pride, ensuring we transact with confidence. It's our passion to help our people and businesses succeed, making sure every Anguillan has the opportunity to flourish in a beautiful country we call our home. Welcome to the People's Bank. Welcome to the National Commercial Bank of Anguilla. Anguilla is our home. We've been here since the beginning. We are the only indigenous bank on the island. We are the pulse of our communities. We are the bank with a difference. Our commitment to building Anguilla means we value our relationships, friendships, homes, and businesses. Everything we do is done with care and expertise. We serve our people with integrity and pride, ensuring we transact with confidence. It's our passion to help our people and businesses succeed, making sure every Anguillan has the opportunity to flourish in a beautiful country we call our home. Welcome to the People's Bank. Welcome to the National Commercial Bank of Anguilla.
A very pleasant good morning to our listeners and those watching online. We thank you for joining us here this morning. Welcome to NCBA's seminar, Making the Decision When the Loan Moratorium is No More. For those of you who wish to send in questions, you can do so at 584-2578. I will repeat, 584-2578. Our presenters this morning are Miss Sharmaine Francois, CEO of NCBA, and Mrs. Shelice Niles, Manager Recoveries. Good morning, ladies.
Good morning.
I'll hand over everything to you, Miss Francois.
Okay, yeah, thank you. Thank you, Felicia, for agreeing to be with us this morning. Listeners, it's always a pleasure to be, to do such forum. And the aim behind those kind of seminars is to really build financial literacy. NCBA believe in educating the public. An educated public will mean that persons will make more informed decisions. So as Felicia has already indicated, the topic will be on making the best decision. We want to guide you as we come to the end of the moratorium program. Shelice, just a few welcome, and then.
Good morning, listening audience. It's a pleasure to be with you this morning as we approach the end of the moratorium period, just to give our customers a little way forward and how we're here to assist you.
So thank you all. So Ms. Francois, can you tell us why did NCBA embark on the loan moratorium program?
Okay, so it come about March of 2020, as soon as, the onset of the COVID-19 pandemic, NCBA basically put out a program to see how best we assist customers during the pandemic period. But before I go into let me just recap in terms of some global, performance. And that would give the context, why the moratorium, and then, the context for the rest of the presentation this morning. So just to recap, the global economy is already showing economic recovery. And so if, I'm not sure if persons have seen the slide. The slide basically gives an idea of how the global economy is performing. And so if you look at, for instance, at a global level, the economy has already rebounded. In 2020, we know that the world economy is contracted, and so globally, the contraction was about minus 3.2%. In 2021, we're seeing the global economy rebounding, and so the 2021 performance was an expansion of 6%. Likewise, in advanced economies, an expansion of roughly 5.6%, and emerging markets and developing markets at 6.3%. That's for 2021. And even when you break that down into actual country or regions, if you look at the United States for 2021, that's this calendar year, we're seeing the United States have already expanded, at 7%. We also see in the Euro area at around 5%, the Latin and the Caribbean at around 6%. So all in all, you're seeing that there is already economic recovery around us. Now let us speak to basically what is happening in terms of our region, the Eastern Caribbean Currency Union. The currency union is still struggling along. According to the latest statistics or estimates from the ECCB, real GDP growth for the region, our region, for 2021, expected to close at around a very marginal expansion of 0.9%, whereas globally the contraction is in the region of 6%. And so we are coming out of a contraction in 2020 of 17%, and that's for the ECCU. If you look at from the Anguilla context, the contraction for 2020 was 29%. So it was a significant contraction. And so a lot of the outlook now for 2022 for our region is an expansion of around 7%, 6.9%, based on the latest numbers from the central bank. But a lot of that outlook is heavily dependent on tourism for us, a lot of our economies, tourism rebounding. So we will see how a lot of the 2022 projections is centered around our tourism product rebounding. And so if that, does not happen, then, those numbers will be affected. So in a nutshell, a lot of that economic recovery is highly dependent on the rate of vaccinations. And we've seen it across the globe. When you look at Canada, France, UK, those regions have already achieved herd immunity in terms of at least 70% of their population already got first dose in terms of vaccination. And then when you look at our region, you have, for instance, we are, behind. Apart from Anguilla, you can see Anguilla is in the top 4 based on the chart that I'm showing. Anguilla at the 63% in terms of first dose of vaccination. So a lot of the recovery is, as I said, is reliant also on the rate of vaccination. That's what we're seeing based on the numbers. So to give context, so based on that economic contraction, particularly in 2020, we had to move fast as the local bank, as the People's Bank, and to see how best we support our customers during these difficult times. So for many of our customers, so both individuals and businesses, what we saw was the impact of COVID on incomes, on cash flows of businesses, and it was necessary that we offer the moratorium. So even if we drill down in terms of Anguilla, numbers that came out of the Labor Office a few months ago spoke to as high as 37% of the labor market was either unemployed, affected via unemployment, or underemployment, and that represented around 2,500 employees. We've seen improvement in terms of the numbers. You also seen in terms of our business enterprises, significant decline in their business cash flows, from as high as 90% to around 50% decline. Again, it all depends on the sector those businesses operate. Some businesses, complete erosion of revenue streams. And a lot of the critical sectors really is the tourism, hotel and restaurant, villa rental, and so forth. And so that is why it was necessary for us to offer the loan deferral program, to ensure that we help persons along the way. Because if you're not working, you're not able to pay your loan. And that deferral program then helped persons through that period. So as I said, as early as March of 2020, we began the moratorium program. So now we are 18 months into that moratorium program.
For persons who might not know, what exactly is a loan moratorium?
A loan moratorium is a financial relief program which we set out to assist our customers that are affected by the pandemic. What it is that it's available to both our individual and our commercial customers. And to those individuals whose income may have been impacted by whether it's the loss of income, whether it's unemployment or underemployment, we assist them. Also, it's for our customers, our commercial customers whose cash flow has been affected due to the declining business activity. We also provided some assistance in terms of cash flow support to our business customers so that they can remain afloat in the form of overdrafts. Also to provide some relief as it is in terms of disposable income or the opportunity to assist other family members. We also provided reduced debt payments. We also provided debt consolidations. We also provided extensions, all aimed towards improving both individuals and commercial operations. As Ms. Francois indicated, this would be 18 months come the end of September, as we started from the onset of the pandemic in March 2020.
Could you tell us who actually qualified for a loan moratorium?
Right.
When it was eligible.
Right. Both individuals and commercial customers qualify for the assistance. It can be individuals who were affected by the pandemic in terms of loss of their income. It can be that their income was reduced. It can be that in terms of a commercial customer, your cash flows were impacted or reduced or even lost. are persons that provided support to other family members. Well, mostly in terms of loans, however, it was offered to loans that were in arrears up to 89 days.
Okay. And could you tell us what type of moratorium support was provided?
Right. We had basically two types of moratorium. You can have your full moratorium, whereby there's a deferral of both principal payments and interest payments. And at the end of the moratorium period, the full amount becomes due. However, due in the sense that that full principal payment and the interest that has accrued over the time is now due at the end of the period. Or you can opt for the partial moratorium. The partial moratorium is whereby you have a deferment on your principal payment, but you pay the interest portion of your payment. The benefit of this option is that at the end of the period, you would have paid your interest, so you can resume your monthly payments. There's options, of course, we go through with you because your income situation may have changed or may have improved or not during the period. So we still have discussions with you. But the beauty of the partial moratorium is that you have no outstanding interest. And even with the full moratorium, where both your interest and principal is deferred, we encourage customers to pay as you can. Your situation may improve. You may not be able to pay your entire interest balance, but you can pay part as you go along, so that at the end of the period, there's a smaller amount that will be added to your principal at the end of the time.
Can you share the value of moratorium support offered in Anguilla?
Okay, so from the onset, we would have reached about 100 million in terms of moratorium support. Currently, we are down to around 84, 86 million in terms of value of moratorium that still currently exists on the book. That represents around a little over 200 customers, both retail and commercial customers. Just to, again, give information in terms of what are some of the major sectors. For us, the key sector that's affected is the household. So private households represent the largest percentage. So we have around $34 million, and that represent families that were affected as a result of the pandemic. So representing 39% of the entire moratorium support offered. So that is significant. The other areas would be, again, all sectors being affected. Tourism represent around 17%. We also, another major one is construction and land development. We also provided quite a bit of support to that sector, and also in terms of professional and technical services. So what we've done is to bucket out those moratorium and to see where the impact really lie. But just to add to, in terms of Anguilla, currently the total moratoriums for Anguilla as of around June, July, is a value of 105 million. So clearly what you're seeing is that 80% of the moratorium support that was provided, or currently, that we are still, as NCBA, still holding hands. We are still there with our customers, helping them through this difficult period. And so that's the 86 million that we are speaking about, because a large percentage of persons actually lost employment, or fully or underemployment. Mm-hmm.
What exactly is at stake for borrowers on the moratorium?
What is at stake? It's 18 months. So 18 months of interest. So if you were part of that moratorium from the onset, from March of 2020 to now, you would have accumulated interest of for 18 months. So just to give you that, I'm hoping that our listeners and viewers can actually see the viewers can actually see the table that we're going to project. The table shows you the value in terms of the monthly interest. So can you just go a couple slides down? I just want to ensure that that's visible. 11. Mm-hmm. Okay. So I was told I am the one controlling that, so let me correct that. So what I want to show our viewers is what happens once you're on a moratorium. The interest does not stop accruing. So every day, interest is added on. So the balance of your principal balance at the time of the moratorium is then interest is calculated on that balance. Let me just open this again. Okay. Okay, so I think I have the right slide. Okay, so interest accumulates. So what we've shown here is that for a loan value of, say, 100,000, be it EC or US, we've given a unit money multiplier, which is at a 1%. If you know what a 1% represents, whatever your interest rate is, you multiply it by that factor. So where you have 100,000 and your loan interest rate is at 6%, monthly the interest accumulated would work out to about $493.15. But whereas if your loan was 500,000, that monthly interest would be $2,465, roughly that, at a 6% interest. The higher the interest rate, the higher the interest amount. Likewise, if you're at a $1 million loan, that monthly interest would work out to $4,930, roughly $32. What that represents after 18 months is, for that same 100,000 over 18-month period, would be that interest, accumulated interest would be roughly around 9,000. That's for 100,000. At 500,000, that accumulated interest would be at 44,000. That's at a 6% interest rate. But if you're at an 8% interest rate, that would be at 59,000. If you're at your loan value is $1 million, you're speaking to 88,000, roughly 89,000 at a 6% interest rate over the 18 months. And at an 8% interest rate, you're looking at interest accumulated of around 118,000. So that is interest that would just accumulate over the period. So that interest, it does not disappear. Yeah, so that's what we want to bring up. What is at stake is the interest remains, and the interest basically accumulates, and it can be a very significant amount, and from the numbers we are seeing. So banks, basically like ours, we have deferred that income in order to provide the support that the borrowers need. Because again, if you're not earning income, then you would not be able to make monthly payments. So what we've done is to defer that until such time that you're earning. But while we defer it, the interest continues to accrue. Yeah. You will hear that repeated right through the presentation. It's important that once a borrower's situation changes, they come into the bank and they recommence payments. If you're earning not your pre-COVID income, whatever you're earning, whatever small amount you can put towards that interest, will reduce that amount at the end of the moratorium. Yeah, and so again, it's important that to understand what is at stake. Moratoriums are not an indefinite solution, so it's not going to be indefinite. There will be an end to a moratorium. So it's important that customers understand so that we as a bank can help them navigate, through that process to come out of moratorium.
Talking about the end of the moratorium, could you tell us when does the moratorium come to an end exactly?
Okay, the moratorium comes to an end at 30th of September 2021. So you'll note we're just approximately 2 weeks away from that. While we note that there are still some sectors that are underperforming, we note that there are some key ones that have positively impacted the economy, and so are employment numbers. So we are looking to encourage the general public to come in and speak with us. We are here to help. We're going to help navigate the customers out of the moratorium. What we will do is we'll reassess their cash flows for individuals, cash flows for businesses, the income for individuals. We'll guide them in the best course of action to take them out of this period, and we'll determine it by a case-by-case basis. So we just encourage everyone to visit us and have that conversation.
Just to add, before we move on to the next, question, we would have communicated from early that, we've had several forums where we would have communicated that the moratoriums are coming, the moratorium period is coming to an end in September. So that is something that we would have communicated throughout the period, and even through our one-on-one with our customers. So as we speak now, what we are doing is meeting customers daily to advise and to, to provide them with the options. And we will speak to some of the options that we'll put forward.
Okay, and we can go straight into that. What are the options to be presented to borrowers to navigate out of the moratorium?
Okay, well, we have several options for our customers, and of course, this will depend on the individual's capacity, whether your income or the cash flows can support the various options. One of the options is, if you would have selected the full moratorium, I would have hinted that you would have had the interest that would have accrued over that period. That would now have to be capitalized onto your principal balance. Now, the way a customer can handle that would differ depending on their capacity. So we may either have to extend the maturity date to allow for a more affordable payment, for a customer that wishes to maintain their original payment, it will increase. We also have the option where we'll provide a separate loan for the interest, but it will have to be at a shorter term repayment. Also, where customers were making the interest payment, they'll now have the ability to either resume the payments or negotiate a more affordable payment at this time. What is important to understand at this point is that we will do it on a case-by-case basis, and it will be dependent on your situation. And we just want the public to understand that we're here to help. We're here to help, and our intention is to work with the customers in terms of where they are at this point in time.
Okay. So could you tell us, how do you go about helping an individual and a business out of a moratorium?
Okay, so before we
go into that one, I just wanted to give a little scenario, just to assist a customer in understanding how their loan will really be impacted by the moratorium. Just for an example of, if I can have the figures on the screen, referring to the current example of a current loan account, where the original loan amount would be $300,000, for example. You have an interest rate of 7%. Your original term was 25 years. Your monthly payment was $2,120.34. And now you're down to a balance of $235,900.19. You have a remaining term of 15 years. But she was on a moratorium for 18 months. What that would mean at this point in time is that you've accrued interest of approximately $24,769. And that has now increased the amount you're owing. Whereas your original balance was down to the $235,900, you now have an outstanding amount of $260,669. The two options I referred to earlier, in that if you wish to maintain your payment, you would then have to extend your maturity. So in that essence now, the example provides you with, if you extend it by 18 months, you will now be additional 3 years. If you extend it by 3 years, you would now have a new payment of $2,342.97. So let me take you through that again. You have two options. If you keep your monthly payment, you extend your maturity by 3 years, that is an option. The second option, if you want to maintain your period remaining, your 15 years, your payment will then have to increase from the $2,120 to $2,342.97. Just to give you an example of how it will impact your payment. In terms of your interest, as I indicated earlier, you've already paid for 10 years. So if you've already paid the interest of the $180,000, that would be the next slide. And you now would pay another 15 years of that payment, so you'd have $145,000 in interest. That would take your interest to $336,000. that would be under the original term of 25 years. If you opt to extend your maturity and you're now having the additional 3 years, you will pay an additional $198,000. In addition to that, 10 years worth of $190,000. So you'd pay total interest of $388,000. That's a difference of $52,000, as opposed to keeping your original term. But remember, you would have had those 18 months of letting your interest accrue. So you would end up paying more in interest as well. That would be an additional $161,000 for that 15 years remaining, which will bring your total interest up to $351,406. That's a difference from your original position of $15,000. This just seeks to give you a better appreciation of the impact on your maturity date, your monthly payment, and the interest when you opt to take a full moratorium on your loan.
Okay. So if you're still having challenges, how will your situation be treated? For example, if you're still unemployed.
Okay, so if you're still unemployed, then we would have to treat with you differently, yeah? So that is why at the end of the day, what we say to persons that are, after that 18-month period, you're still unemployed, you would have to come into the bank very early. So we would have to have a different set of discussions with you. The important thing is coming in early, let us sit down and see what are the best options, that we can present to that customer. So let us look at a case where we have a person pre-COVID had a mortgage loan, paying very well. Now COVID has happened, the pandemic, we are in the pandemic, 18 months into the pandemic, they are unemployed. And that person is maybe a qualified chef at a hotel, or, so they have some level of skill set. We will assess, so we will assess your situation and may extend the moratorium, again, because your unemployment may be totally dependent on what is happening now in terms of the tourism sector. Yeah, so again, it all depends on a case by case. So as much as the moratorium is coming to an end, on a case by case, we will work with every single customer, because at the end of the day, we want to ensure that as many customers that we can, or if every customer we can save through this period, to take them over, in a sound financial position. So that again, it's important to speak to us. So we want our customers to call us. We will sit with you. We will assess your current situation, and we will give you the best advice. As much as we present those options, we will look at non-traditional options to see how best we work with our customers. I mean, some of the work we've done thus far, if a customer comes and, for instance, you're now earning half of what you used to earn in terms of pre-COVID, you have your loan, and where we have to now extend your loan, you may be extending your loan post-retirement. These are some discussions we will have. We may have to extend person's loan, beyond retirement age, but with very close conditions, so that as your income increase, you would make more payments. You understand? You'll make payments on your principal in order to reduce the overall tenure. So again, there's no one size fit all. Where you've regained employment and everything is fine, we advise that you either capitalize, or if your income can support a separate loan. One of what we've looked at is a separate loan. The separate loan can be a zero interest loan, because one of the things is to not pay interest on interest. So whatever that works to suit that customer, the end result for us is to ensure that our customers get the best option. Because these are difficult times. Yeah.
Shelice, I know in your presentation you just mentioned, the additional fees that, that is added on to the moratorium. So could you tell us, I'm sure for persons that is a downside, but can you tell us why moratoriums are good and also bad for you?
Okay, just to recap a bit though, it's not necessarily that it's additional fees. What it is the unpaid interest that is added at the end of the period. Well, moratoriums are good and bad. They're good in the sense that they are for temporary relief. They are for short periods, and they help you in terms of your cash flow issues. For example, if you have liquidity problems in terms of your loss of employment, if you have cash flow issues, so it provides that relief. But if it stays for a longer period, it becomes a financial burden, because what it does is it increases your debt. Moratoriums also, it's a misunderstanding as well, as moratoriums are not there to provide extra money. It's there for the relief and not to improve your disposable income, for example. And also it's important to recognize that the interest doesn't stop. Your interest continues to accrue during the moratorium period. So those are, I guess, the areas which cause persons to feel that it's good and bad, which it is, but it helps a short-term period for whether it's a pandemic, a natural disaster. It helps in those instances.
What is the impact of COVID-19 and moratoriums on banks?
Okay. So on banks, the impact is as like any other institution. Yeah. So for instance, in terms of business activity, whatever that's happening in the economy has a direct implication on activity within the bank. So you would see, for instance, a reduction in in terms of our revenue. Yeah. And so a lot of our revenue comes from banking activity. So if you have less banking activity in terms of people are earning less, so people would be swiping less in terms of utilizing the point of sale machines. People will be also not taking loans like if they were employed. And how we make money is through loans, so which is the bread and butter of the business. And what we had to do during the pandemic is lower our rates. So where we pre-pandemic, where we would have offered a mortgage at 7% or 6%, we had to reduce mortgage rates in order to make it more affordable. Yeah, so all of that has a direct impact on the business. The other area is the moratorium itself. When we offer moratorium, how banks rely on the liquidity when you make your loan payments, that brings liquidity into the bank. So if we are accustomed of collecting $2 million from loan payments, as we offer moratoriums, remember, no payments coming in. So the banks are now not receiving that level of liquidity. So that can pose over 18-month period, pressure on banks' liquidity. So you also have the liquidity strain. Thankfully for NCBA, notwithstanding that, we still have very strong liquidity positions. You also have, with all of that declining business activity, that would have a direct impact on profitability. It will also have an impact on our capital. Now, one thing I want to make a note of is the whole moratorium support. For most of the banks, not just NCBA, but across the region, banks would have incurred significant provisions as a result of the moratorium support. Once a loan is placed on moratorium, it changes the risk profile of your portfolio. Again, because of a lot of the uncertainty brought about as a result of the pandemic. So because of that uncertainty, banks have to assign, make a provision for possible bad debts. So if a percentage of those loans go bad, we have to make a provision for it. And so, and also for the increasing credit in the risk of that portfolio, we would have to make an allowance, put monies aside to basically cushion that. And so all of that places pressure on banks' earnings. So we are not immune from the whole, pandemic. We are equally exposed, but notwithstanding, we understand our role in the economy, and so that is why NCBA, as the People's Bank, notwithstanding the pandemic, we went on a very aggressive drive with the Come Home, where we would have offered mortgage loans, 100% financing at low interest rates, so that we can still encourage some level of economic activity and still encourage some level of wealth creation among our people in terms of acquiring a mortgage, acquiring an asset. And so that was a plus in terms of ensuring that we still, made that provision. Not just that, our business customers, we gave a lot of support. We extended lines of credit, overdraft lines, just to ensure that our business community remain afloat. Our business clients remain afloat during the pandemic. So notwithstanding the pressures, we remain strong in terms of our support to our customers, which is paramount for us. And so, to answer your question around the impact, so the impact is there, but we're managing it. Mm-hmm.
What advice would you give to businesses and customers on managing their finances during these times?
One of the top ones on the list is for particularly small to medium-sized business to keep records. Because a lot of times financial institutions cannot provide the necessary support to the small business, customers, again, because of the lack of records. So it is more important today to have you make your regular deposits, no matter how small, keep your financial records in place. And that will enable you to advance relationships with your banker. Strong leadership is required in these times. So as we look at our organization, we have to ensure that we have the right leadership team, the right management team. We are making sound decisions. We have to ensure in the pandemic we have our response plans, whether our response plans covers adequately, the pandemic risk. So those factors have to be considered. Are we putting in the necessary protocols to safeguard our customers, our staff, and in terms of business continuity as a whole. So the pandemic response plan is one of the critical strategies that we will put forward. You must have a strong focus on risk, because we see the pandemic has posed significant risk on individuals, on businesses, and so it's something that one now has to develop a framework. How do you, mitigate against those risks? How do you respond to it? And the other area that I would add in is cost containment, cutting down on expenses. Even as we operate, our businesses, how best can we streamline in light of the decline in revenues? So you would have to see how best you manage that. Reassess your revenue streams at this point. Also, some of the other areas that we would have mentioned, even at a previous session, is to look at your capital spend and basically manage that spend, make a proper assessment before you go into capital investments at this point. Work closely with your bank, and within your bank, the bank have the expertise. We have staff that have the expertise that can give sound advice on whatever decision that you look at, especially critical financial decision or significant financial decisions. And even in terms of moratorium, to work closely with your bank, because one of the things that we've already doing is sitting with each commercial customer and assess your cash flows. As your cash flows increase, you make small payments. And Shelice would have mentioned that every dollar you make to your interest would help reduce that outstanding interest at the end of the day. So as you start to earn, you make some interest payments. And we do have a lot of our commercial customers doing that at this point. Another thing that I will add in terms of advice to businesses is to properly assess. At this point, we need to be properly assessing the impact of the pandemic, because we've had conversations with some of our customers, and the pandemic has not, in terms of assessing what that impact has been on the business, it's important to assess that and to put in both operationally and financially, and to see how best you plan ahead. And so there are people out there that can assist. You have accountants out there that can assist. You have your bank that can assist. Let us see how we work together to keep our business people afloat during this difficult time.
Well, thank you, Ms. Francois and Mrs. Niles, for such an in-depth presentation. I'm going through, I was looking through, but I'm not seeing any questions. I'm hoping that everyone's question probably was answered. But what about persons who might have that goal to a desire to perhaps own their own home, but still, those persons might have been on the moratorium? Will they be eligible for an additional loan? How would you factor that in?
Yeah, the moratorium does not affect, and that person is gainfully employed. You now have regained employment, yeah? From the question you asked.
Yes.
So the moratorium is a contract you've entered between the bank and yourself. And that moratorium in question is brought about as a result of the pandemic, the COVID-19 pandemic. So that moratorium does not impact your credit score or your credit rating with the bank. Yeah. So if you have to come to the bank, you on moratorium for 18 months, you now come into the bank, you've regained employment, you've refinanced in terms of your interest, your loan is now up to, and you want to now extend it. We will do that, because and we have actual cases right now where persons have taken additional loans, they've basically capitalized the interest, took additional funds, so it does not affect your credit score. Yeah, and so that's one thing for our listeners to know, that the moratorium does not affect your credit score, and so that's one thing to know. So you can still take additional loan. Yeah.
I'm not seeing any questions.
So listeners can send, it's a WhatsApp, you can WhatsApp the number. Could you give the listeners the number again? They can send their questions via WhatsApp.
At 584-2578. 584-2578. You can WhatsApp your questions here to us at NCBA.
But as we wait on, just to recap, we want listeners and our customers to know that NCBA is here for you. Yeah, we are here to work with you. You are not alone, and it's some moratorium support for the region. Just our small region is in the value of $2.4 billion. So it's not just an Anguilla thing; it's right across. Even within Anguilla, it's all of us in it. And your bank, we are here to work with you. What we want is persons who start to come in. Come in, let us have the conversation. When you come in, one of the first things we'll do is to assess if it's a business, we assess your cash flows. We assess in terms of whatever projections. You may not be earning at the levels you used to earn, but we assess your business projections. And we'll give you the best advice, because at the end of the day, it's about cash flow. Once you have any level of improvement in your cash flow, it's important that you restart. And so you come in, you sit with us. Even those persons that have not regained employment, we need to see you more importantly. So to come in and have the discussions with us. And it's important to have the discussions early. Because when you start early, we can put in the different, look at your situation and see how best do we extend. There's some persons or scenarios that may need a different type of decision, but at least we can advise you early. Because one of the things that, once a moratorium comes to an end, and we are unable to reach a customer, and the customer has not come forward, and there is no recourse that loan can drift into non-performing or default status. So we do not want that for any one of our customers. So that is why we're asking every customer to contact the bank. We are also reaching out to our customers, but you come in. You can come in at any time during the week and sit with one of our credit officers, and they will walk you through the process, and we will tailor it towards your own situation.
Okay. Well, we are still here waiting. Viewers, callers, listeners, you all can call us right here at 584-2578 if you have any questions pertaining to the loan moratorium. Please call us, or as Ms. Francois said, you can come in and talk to any officer here at the bank. They're willing to serve you.
Yeah, so and again, we have around 2 weeks left to the end of September. And so it's important that customers come in. There are customers, particularly those that continue to be unemployed. We want you to come in. And I mean, I'm sounding like, I'm repeating, but it's important that you come in early. Your bank, we are waiting for you. We will reach out just to ensure that we tackle this situation from an early stage, before it gets to an advanced stage. And an important point that Shelice mentioned earlier, one has to see the moratorium support as not additional income, because we would have extended moratorium to a wide range of persons. Those that were unemployed, those that were underemployed, but we also extended it to persons that they had family members that were affected. And so for those persons, once you're employed or you have some level of employment, we would like you to come in so that we can start the process of, restructuring that loan. The restructuring can take several forms, and I think Shelice touched on some of the, in terms of what are some of the options. So you have the option of adding on the interest, and then, continuing on, we can extend it. You can have a separate loan for the interest. And it all depends on your cash flow position at this point, what your income is at this point. And so we can best tailor it once we sit with you and assess your situation. Maybe what we can do is check on Facebook if there's any questions coming through. Because it is important that we hear from you, so that we can answer any questions that you may have. But as we wait, I will also share some key survival strategies for individuals. We may sound like we're repeating, but it's always wise to hear the same thing over and over so it gets stuck. And it becomes a way of life. Now, for individuals, what we've said from the onset of the crisis, I remember our first seminar to the public, we would have spoken to ways to stay afloat as individuals during this crisis. We spoke about an emergency budget and keeping your needs in terms of looking at your basic needs and focusing on essential items now. Your needs are not your wants. And so as we prepare that emergency or that survival budget, we would have to focus more on your needs, your health, safety, shelter, those necessities. And so separating that wants and needs. We also have to focus a lot on establishing that emergency saving. Now you have a wide cross-section or a wide percentage of persons that are still employed. And so if you are employed today, it's important, if you have no savings, if you have not started saving, it's important that you start to put aside that 5 to 10% at minimum towards building that emergency fund. That is the emergency fund that will help you through a pandemic. And the basic rule of thumb is that one should have at least 6 months of expenses saved up in order to meet your expenses should you enter a stage of unemployment or underemployment. So it's critical that we do that. It's critical that we continue to explore cost-cutting measures. And I am sure persons have heard me at other forums where I would give some basic tips on looking at our daily habits, our daily spending habits. If you, for instance, you're eating out, and that's one I use quite a bit. If you're eating out, say 5 days a week or maybe 7 days a week, we can cut that down by 1 or 2 days. If you, for instance, for us women, if we spend a lot of money going to the salon and stuff, we can do some of it, some cut back on some of that expenditure. Just a number of areas. Just look at your budget and see how best you can streamline that budget in order to allow you to put aside some monies towards saving. Because we meet persons every day, and persons tell you that they don't have any surplus funds. They cannot save. But when you sit down and you do a budget with them, you see where they are operating outside of prudential guidelines, and you can further advise. There's a question?
Yeah, there are a few questions. One is there any way the bank can reduce the percent at least by 1% to help those persons with the moratorium? Anything that the bank can offer at this time?
Oh yes, yeah, we do that. That's a daily occurrence for us. So again, once you come in, we will, if your income, again, is the history, the relationship. So you've come in and when we assess everything, and it means that we may have to reduce your interest rate to make the loan affordable, we will do that. And that is something that we have done and we continue to do with our customers.
With regards to the 100% financing, they're asking, when does this come to an end?
Oh, that has come to an end. Yeah.
Yes.
Yeah, okay. That has come to. But notwithstanding, the bank, we offer loans. That's our bread and butter. So a customer can come in and still qualify for 100% financing. If, for instance, you coming in and you already you own land, if you have land that is already paid for, that is already your equity injection. Yeah. So you may be able to qualify for full financing without requiring any cash injection. Yeah. So we tell persons to, if you're thinking of building, notwithstanding the Come Home program is closed, please come in and have the conversation. You can call in to us, you can send us an email at credit@ncbal.com, and we will have the conversation. We'll crunch the numbers and see how best we serve you.
Another question is, can the bank reduce the interest rates on business loans in particular? Because in the U.S. it's about 2 to 3%.
Yeah, so when you look at the U.S., the deposit rates, okay, so the way loan rates are priced, in our parts, in terms of the Eastern Caribbean, we have what we call a minimum savings rate. So on deposits, EC deposits, we must pay persons a rate of 2%. So that's the cost. In the US, banks would sometimes charge you for keeping your monies in the bank. So you would get a negative interest rate, or you'd get interest rates as low as point-something%. And so banks can then offer very low interest rates on loans, like 2 and 3%. In our parts, because we have a high cost that we have to pay to our depositors, we would not be able to price our loans at such low interest rates. So if our cost is at 2%, if a bank priced it at 2%, then we will close shop because there's no margin. So that is how the maths is done. So in our parts, we balance paying interest to depositors, and so there's that balancing effect where we have to also factor in a margin, and then in terms of setting that pricing for that loan.
Another question here is, would there be any further banking arrangements of a similar nature anytime soon, saying that the moratorium will be coming to an end at the end of September?
Mm-hmm. Yeah, so in terms of moratorium, the question speaks to.
Yeah, but I think they want to know any further initiatives or programs the bank will be implementing. At least that's the way I interpret it.
So the moratorium comes to an end, in September, but it does not mean that the bank cannot extend someone. Mm-hmm. So, but only after we do that assessment. So prior to September, one could have just gone online to our website, print a moratorium application, and apply for a moratorium. Come September 30th, this would not be the process. You would have to come in, we would have to do an assessment, and based on that assessment, we will determine on a case-by-case whether that moratorium will be extended. Yeah, so that is how it will be done post-September 30th.
Okay. I'm not seeing any more questions. Some persons are making more like statements.
Okay.
I'm not sure. Someone made a comment and said the interest rate of a business loan should be lower than any other loan, especially in this climate. The Asian businesses overrunning the Anguilla businesses. If you're an entrepreneur. I don't know if you want to comment on that.
Yeah, so I mean, all I will say right now is interest rates are at its lowest. So even, for instance, right now, where you would have had business loans priced higher, business loans, personal loans are very much comparable. Yeah, so it all depends on the customer itself. So every customer goes through what we call a risk rating. So we have to assess your capacity to repay that loan. So if your capacity is strong, then you get a good score. If the condition in terms of your cash flows, your employment is strong, you get a very good score. Yeah. You also look at your capital. If you already have your net worth in terms of your balance sheet, if your personal balance sheet or your business balance sheet, and if that is strong, you get another good score. We look at collateral, what is securing that loan, and so that is also part of that calculation. So there are a number of C's that we look at, and then we also have character, which is a very critical C. So your past credit, how well you would have paid your past credit. So all of those 5 C's at basic, we would then come up with an average price, or what we call a risk score for you as a borrower. And based on that risk score, your loan will then be priced in terms of that interest rate. So where your risk is high, based on those 5 C's that I spoke to, then your interest rate would end up higher because the risk is higher. Where the score is, low, you have a low risk score, then you can get the lowest rate that we offer because you're a premium customer. So again, it depends on, so it is not an answer that you can give because it all depends on a case by case as we assess customers. Yeah?
Correct. And just to endorse what Ms. Francois said earlier, it's just important for our customers to understand that we're here to assist. And it's going to commence with that conversation. Come in, speak to us. We'll advise of the best way forward. And that is the only way we can move forward, really, is a discussion between us and our customers.
Okay. I'm not seeing any more questions. I'm sure
we can... What's the time now?
Conclude. It's about, 12:15?
Okay.
Okay.
Yeah. So, so if no more questions, we just basically want to recap. I will do some closing, and Shelice, you can also. So just to recap that we are here to work with you. Yeah, so your bank is, NCBA is owned by government of Anguilla. Yeah, and being owned by government of Anguilla, it means that NCBA is owned by Anguillians. Yeah. We are for Anguilla and the residents of Anguilla. And your bank is the leading bank. We have deposits. When you look at our total market share, we are at over 60% of deposits, banking deposits, lies in NCBA. And that speaks to the confidence that the local community has placed on NCBA. And so based on that confidence, we have to, our role is really to serve you. So that is why we are here this morning and, encouraging persons to come in. Let us have the early conversation. Let us see how we can work together and to see how best we can take everyone over that, that hill of the pandemic. So we just pleading as your bank, as I said, we continue to work with our customers. to ensure that every customer gets through this moratorium successfully. Yeah? Shelice? Yeah.
But I'd like to close by just to remind the listening audience that, as I said earlier, we're here to assist. We also implore the customers to come in. Most customers, as we said earlier, your financial situation may not have improved, but we encourage you to come in so we can tell you what's the best options for you. Also, we also would like customers to understand that in terms of the way forward, we can only see our way out if it's a discussion between both parties, and it has to commence with that open discussion.
Okay. Thank you, Ms. Francois. Thank you, Ms. Niles. Thank you for providing us with such important information. And we want to thank those who participated with us this morning. And for those who did not, you still have that opportunity to come in, talk to the officers here at NCBA. They are willing to help you and to serve you. Thank you so much for joining us here this morning. Have a pleasant day.
Yeah, thank you.
Thank you.
Yeah, we good?
Of our communities, we are the bank with a difference. Our commitment to building Anguilla means we value our relationships, friendships, homes, and businesses. Everything we do is done with care and expertise. We serve our people with integrity and pride, ensuring we transact with confidence. It's our passion to help our people and businesses succeed, making sure every Anguillian has the opportunity to flourish in a beautiful country we call our home. Welcome to the People's Bank. Welcome to the National Commercial Bank of Anguilla. Anguilla is our home. We've been here since the beginning. We are the only indigenous bank on the island. We are the pulse of our communities. We are the bank with a difference. Our commitment to building Anguilla means we value our relationships, friendships, homes, and businesses. Everything we do is done with care and expertise. We serve our people with integrity and pride, ensuring we transact with confidence. It's our passion to help our people and businesses succeed, making sure every Anguillian has the opportunity to flourish in a beautiful country we call our home. Welcome to the People's Bank. Welcome to the National Commercial Bank of Anguilla. Anguilla is our home. We've been here since the beginning.